Hello everyone, welcome to Ask Traders. Hope you had a great weekend, and we will go on with the idea for this week. It will be based on the euro versus New Zealand dollar currency pair. I would like to get back to our previous idea, which was New Zealand Swiss franc first. What we have here is buying opportunity that we had last week on Monday, and what we had, guys, is clear uptrend. The target has been reached. What is more important, it has been broken. So the resistance has been broken, and right now we have price at the support, which is 200 exponential moving average. So the support is being rejected. So as long as it holds, there are more upside potential. And this is the reason we are going to the quite correlated currency pair, which is euro versus New Zealand dollar. So let's get started. The euro New Zealand dollar, this is a daily chart, as you can see. And on this chart, we also can observe support and resistance areas. Clearly, there is a resistance. We had multiple bounces, and this is the area of support. The previous low, we had not reached the lowest low point here at this stage, although current correction has resulted in a rejection of the moving average. We had a break below, rejection right there. Price attempted to break above this rejection. Let me just show you. We had rejection here, and now price attempted to break but failed to close. So this is showing the price weakness, and potentially as long as this high holds at 179.80, as long as there are no daily close, price should be going down, should continue trending down towards this support area. We have applied Fibonacci retracement to this corrective wave after breaking and closing below the moving average, and 161 is the nearest point where price could potentially get. So this is the area of 150.75.80. This is nearly 300 pips move on this pair, but let's move on to forward chart and see what happens right there. Here we have very similar scenario where price actually rejecting the 200 exponential moving average. There were attempts to break above, although it failed. Now, what we have also a rejection of 50% Fibonacci retracement level, and it also rejected. What could happen at this stage? It's some sort of consolidation between this resistance, which is 179.45, and this level of current support where previous resistance has been formed. There can be potential move like that, although it looks like it getting more and more bearish at this stage. And finally, let's move on to the 1 hour chart. On the 1 hour chart, we have applied another Fibonacci retracement level to the corrective wave up after breaking the 50 simple moving average. Here we have our previous target corresponding to 161.8 fips, corresponding to 461.8 fips, and both of these retracement level are at 175.80. This makes this potential move coming quite soon. Now, why we think it might be that the price will continue moving down without consolidation is because of the uptrend trendline breakout. We can see the breakout has occurred. Now, price has broke below the moving averages 50 and 200 period. Now it corrected up and it rejected actually these moving averages. If we zoom in, we will be able to see clearly. Now here was the rejection of 200 exponential moving average, and price failed to close above. And this is another point to consider for the potential downtrend. However, if there will be 4-hour break and close above this high established today, price is very likely to reverse to the upside. So we need to watch actually this level, this high that has been produced today. If price manages to break above, then yes, it will be an uptrend. But so far, it really does look like price is going to attempt to break to the downside. So this was the idea for this week. Hope you enjoyed it. If you did, don't forget to subscribe to our channel to see next idea coming Monday.